So 2008 is infamous for a lot of real estate investors and just for a lot of people in general. It was one of the biggest crashes in our economy in the US ever, and particularly in the real estate industry, because the real estate industry is actually what kicked off that huge recession. And so a lot of people are starting to see now a lot of similarities between now in 2022 and back then in 2008 when we had that giant crash. They're starting to see right before that crash in 2008, property values were skyrocketing. It was unbelievable. It was ridiculous. And no one could believe that any of this was true. And so now we're starting to see kind of the same thing. We're starting to see prices we've been seeing it for the last few years. Prices are just skyrocketing, and people are, I think pretty much everyone I talk to is just waiting for another 2008 crash. And that is their big question. When is the market going to crash? Well, here's why 2022 is not like 2008. The crash of 2008 happened because lenders were giving out money like it was candy to everyone. Anyone that had a breath in their body could get a mortgage just about for any house. And what happened was they were giving out so many of these loans that were completely risky. They had no intention of actually paying them back. You got people making like minimum wage, owning 2 or 3 houses for no reason other than the fact that the lenders just were giving them out to anyone that could sign a piece of paper. And what happened was eventually all of those loans went into default and no one could pay their mortgage. And so now you have all these different houses with making absolutely no money for the lenders, and they foreclosed on so many of them all at once, meaning they were trying to sell, they were like fire sale on all of these houses, trying to get rid of all of them, which meant there were way more houses on the market than there was demand, because all of a sudden overnight, basically, all these loans were called due and they were all foreclosed on. And now you have just a massive flood of inventory. And it was all caused by some predatory lending practices, where if they had done their underwriting and they'd done their homework properly, they would know that these people had no intention of actually paying these off. They had no ability to pay these off. And eventually it caused a huge crash. The difference now is lending practices have gotten a lot tighter over the last decade. A lot of new laws, in fact, were even passed to prevent something like that happening again. Lenders have to be very, very careful about what they can do. They have certain limitations on things so that they make sure that they're, being as guarded as possible. The government wants to make sure they're not going to have another 2008 crash. So what happens is people getting a loan now, it's a lot harder to get a loan now than it was in 2005, 6, 7, leading up to that crash. Now people are actually, the underwriting happens. Foreclosures still do happen, but it's not nearly at the rate that happened right before 2008. So now what we're seeing is a supply and demand problem. Over the last decade, we have basically been building about half as many houses as our population has been growing. So we have a much, much larger demand of houses. You've got all the millennials now looking to buy a house, but the inventory, the new buildings over the last 10 years has not been keeping up with the amount of population that's been growing. So we're seeing a huge spike in supply, or a huge spike in demand, and we're seeing a shrinkage in supply, that's just a supply-demand issue. Now the prices are skyrocketing because there's just not enough houses for everybody. So the fundamental issue is completely different. It's not because all kinds of people have 2 or 3 loans on houses and none of it makes any sense, and it's all just a house of cards is all just going to come falling down. This is a fundamental supply and demand issue, and until we start to build more houses, until we start to get a lot more supply, because demand's not going to go away overnight. We still got a lot of people entering the market. So unless we get a much bigger supply, demand is starting to come down a little bit with interest rates. We're starting to correct a little bit, not even correct all the way. We still have a long way to go before that happens. We're going to see prices continuing to go up and go up and go up. And now that we have trillions of dollars from the government poured into our economy over the last year or two, that money always ends up in real estate on the back end. So we're going to see all of that continue to flood back into real estate. Prices are going to continue to go up. Supply is going to pretty much stay the same, or probably, unless we start to build, double or quadruple what we've been building for the last 10 years, we're really not going to see a whole lot of difference and interest rates, unless they continue to spike up, it's still going to be a pretty hot market, and prices are going to continue to go up. So are we headed for a crash? It's not the same. There's too many buyers that are going to buy. The only way you get an absolute crash is if you get a massive amount of sellers that want to or need to sell their house at a large discount for less than what the market value is. And right now, no one wants to sell their house for a discount. No one has to. No one is, not everyone is underwater like they were back in 2008 and the banks needed to foreclose on everybody. So right now, we're starting to see a little bit of a breathing room because interest rates are going up, but we're still in a very, very hot seller's market. We still have very short inventory, and we still have a high buyer demand. So it's a strong fundamental market.